Hello, everybody. I gave everyone 1 minute to start, but let's be efficient. Welcome, everybody who has joined us through LinkedIn or through YouTube. I hope you know why you're here, but if you don't, then this is a panel discussion on how AI is transforming the fundraising for early stage startups. I have a personal curiosity in it, and I have put together, I hope, a very nice panel for you. We are joined by Ashok, who is a part of NuFund, and they are basically an angel organization, and they have probably thousands of startups they are evaluating a year. And Sigvards, well, he used to be a founder, then he joined the VC. Now he is a founder again. As of 10 days ago, he decided to leave the dark side and join the founders again. But before that, he has been a part of HealthTech VC. So his view of it is more precise and narrowed down because you probably haven't been working with a huge amount of startups and your assessment probably is much deeper. So this was my idea of putting this panel together because two different perspectives that are valuable for everyone who is joining, either you're a startup or if you're an investor. I also try to make this panel entertaining for both sides because either you are trying to put a better process for you within the organization or you're trying to understand as a founder what the hell is happening on the other side. This is the place for you to be. Welcome, gentlemen. I think I will not be boring everyone with any other introductions. I will give the floor to you. The flow of today is going to be that I have questions. I also have opinions sometimes, but the floor is mostly yours, and I will be addressing questions to both of you. Also, feel free to have conversation between the two of you if the situation allows. But I will give the floor to you, and Sigvards, maybe you can introduce yourself, introduce your past position, how it was working. I would also like to get a lay of the land in terms of numbers, how many deals you evaluated, how many deals you tried to invest into, so we better understand the position you're coming from.
Sure. So first and foremost, thanks for having me, Daria. And yeah, so my name is Sigvards. I'm now a founder, but for the last 4.5 years, I was part of Verge HealthTech Fund, which is a Singapore-based HealthTech exclusive VC fund investing in impactful HealthTech companies across the globe. So you mentioned asking me about numbers. So we invest globally. So our team is based across Europe and Southeast Asia, and we have invested across all 6 continents, right? But that being said, so that means that we see a lot of still deal flow. So each year we saw roughly more than 1,000 companies. And essentially based on that, we invested, let's say the most active years, close to 10 plus minus. So you can do the math in terms of what was let's say the success rate for startups, right? And of course, since we invested across the globe, so, well, we are where we were, and the team is still operational. So they're a team of 8 people, partners, associates, managers. So yeah, it's a lot of, let's say, things to cover. And this is where our dear friend AI comes into play.
Thank you. Ashok, can you introduce yourself and the NuFund as well?
Yes, thanks, Daria. Ashok from NuFund. We use Dealum, so first of all, I appreciate the platform and how that helps make our life more efficient, at least in our investing life. And like Sigvards, I've also gone back and forth between the founder, investor, and back to founder, and back to investor, and then concurrently, which is where I've probably spent most of my life for the last 10 years. But specifically as it pertains to NuFund, which I have been the executive director of for almost 10 years and seeing 1,500 or so deals per year. So again, you can do the math, and it's a large number of deals, 10, 15, 20,000, and I've seen many outside of NuFund as well, through my own angel investing. So I've seen many deals, and I think one of the things that keeps me up at night is filtering the noise away from the signal. And the larger the funnel, the more difficult that is to do. And that's where I found AI to be one of the most helpful resources.
Thank you. And I will also introduce myself. I will be the host, and I'm part of the Dealum team. We are an investment management platform for investment organizations. We mostly work with business angel groups, but we also have accelerators and VCs. And for startups, it's a place to find investments. But before this, I was part of one of the largest accelerators in Europe. And for 3 years out of 5, I've been part of the scouting team. So our deal flow was at the top of it, close to 3,000 inbound. And then we try to invest also into about 100 startups at the end of it. Success rate is probably better than Sigvards, but this was the ideal goal. We didn't always deliver on that because quality over quantity has been always important. And knowing how it all works, I am now very curious to understand, because I left right when the ChatGPT arrived on the scene. So I'm curious to see how the selection process and generally managing the process has evolved with AI and hopefully improved. But this is us. If you just joined us, welcome. Get a cup of tea, and I think we can get into it. My next question is going to be, can you walk us through how the deal goes through your funnel, where it arrives, what steps it goes through until it arrives at yes or no? Ashok, maybe you can start.
Yes. Ultimately, one of the utilities for us with using Dealum, for example, is we are trying to centralize our opportunities in our deal flow, because having a lot of deal flow is potentially a problem in and of itself, and then having it be fragmented compounds that problem. So the reality is we do have a lot of deal flow and we want to, but then we need to organize it in order to be able to do that separation of signal and noise. So in our case, we, one way or the other, try to get every opportunity, every inquiry, whether it comes through chat, whether it comes by email, whether it's a conversation, at the club, or whether it's directly through our online platform, Dealum, we want to streamline into our funnel on Dealum. And that way we can begin our process of review. So one way or the other, and one of my favorite new features on Dealum is the application AI generator. One click or one email can turn a pitch deck into an application, because I'm also sensitive to the fact that we don't want to create a lot of friction for founders up front to do these lengthy applications. This is a cultural thing at NuFund. I know some investors want a robust application up front, but we don't. We want to just get the basics of the company and then get to a conversation type of assessment one way or the other, including using AI for that conversation assessment in some cases. So we want to get the deal logged using AI, using the application, using any means necessary to get it in the funnel, at which point we then want to get the right eyeballs on the deal at the right time. So what does that mean? The right eyeballs for us, since we have this bench of like 350 subject matter experts in a variety of areas. So, for us, genomics, semiconductors, and AI business SaaS, just to pick 3, right? There's like 20 or so areas that we generally invest in. The deal comes in and it's a vertical SaaS in the heavy equipment sales space. We want to get 2 to 3 people from our bench, the members of NuFund, who have some experience either in the industry or in vertical business SaaS, to look at the deal and say, either this is something we should look closer at, or this is not a fit for us. If it's the latter, we want to send the founder a timely message. That's our goal, letting them know that it's just not a fit, which is obviously most deals. You do the math from top to the bottom of the funnel. We're investing in like 15 companies a year, by the way, but I think that conversion rate is pretty common. So once we get, let's say, 3 people to look at the deal for the deals that we're advancing and give us an assessment, if there's some level of conviction that we should look even closer at it, which is a assessment basically by a representative group of the fund who can then make a decision whether to invest or not, right? So that's sort of the third touch point you can look at it as. Then we'll invite the CEO to have a actual meeting with what could end up being 40, 50 or more people who will listen to the story, ask questions for 15 minutes, and then make a final decision on whether or not we go into due diligence. And if we do go forward there, which might be about half of the companies we see, a little bit less than that, then we will run a typical venture due diligence process. Like most investors do, we try to do it within 30 days or less, and we're pretty good at sticking to that schedule. And at the conclusion of that due diligence, if we don't pass on the deal, which again will be the majority in due diligence, the way this stuff works, if we decide to invest, then we will have a final vote among our fund, and then we write a check for typically $250,000 is our minimum check size. So, it's a process of trying to organize the deal flow at the top, trying to match with the right subject matter experts, which we also use AI, a tool that we've developed to help, kind of identify the right people. And then a short series of meetings to get to the fundamental questions answered and ultimately make a decision.
Mm-hmm. Very interesting. So, and then how long does the whole process take for you on average?
From end to end, I would say on a deal that we're, actually doing, it takes 30 to 60 days. From the point that a deal comes in, and it takes, a week or so, let's say, to identify it, get the right people, looking at it, then assessing it, having, an initial meeting with the founder, and then, going through that due diligence process, which, is the longest of kind of the stages, since it's making a decision on whether or not you're going to invest. And, on average, that's like 3 to 4 weeks, for us, and then another week or so to sign documents and wire funds.
Okay, thank you. And Sigvards, how did your process look like? And also, I would be curious to know, because you were not only assessing the deals, you were also sourcing them quite heavily, I assume. So how did the process look for you? And how long did it take?
Sure. Happy to share. I think so. In our case, so one thing to consider is, so because we were a specialist fund, and essentially most of our deal is also inbound. But that being said, a super important part is, and the fund still does, is super important to actually do active research, understanding actually the spaces where we want to invest, why we want to invest, where we see the potential biggest opportunities, and where we actively are looking for outbound, right? And so, but that being said, then afterwards, similar as Ashok mentioned, so for us as well, it was every interaction, whether it's through our web form, chats, events, conferences, and so forth and so on, just coming into our own custom built system. And then afterwards, for us, it was pretty straightforward in terms of like a classical VC fund. We were just associates. We were like the first check where we essentially manually went through the actual decks, give our feedback. Then the partners have actually their second opinion, saying, okay, do we look at it deeper? Do we want to actually have a conversation during our deal flow discussions weekly or not? And then afterwards was classically, okay, is it straight yes? Do you want to have a call? Do we have questions? And we reach out to the founder and go through the process, or actually try to be as quick as possible to turning them down. And actually not just like, okay, you're too early, but actually giving them concrete, let's say, hey, we just maybe don't understand the space that much. Or because let's be fair, even though we're specialists, we also didn't know that we don't know a lot of things, right? And the same thing is that maybe it's just another timing. Maybe let's say it doesn't fit our thesis, or it's maybe we don't invest in competitor companies as well, right? So if we have a portfolio company as well, so we try to avoid that as well, and so forth and so on. And then afterwards, essentially, it was like a classical streamlined process where it's like first call, second call. Okay, we have 2 deal captains as partners actually that bring the deal to the IC. 2 IC process. First one, do we actually go for due diligence, sign the NDA, and then afterwards, essentially, okay, the deal team actually works on the deal and presents eventually to the IC. And do we give out, a term sheet, do we invest, and so forth and so on. Now, that whole process for us was on average, so I always tell that we're not the fastest VC out there, but we're definitely one of the most thorough in terms of our subject matter, right? So in that sense, we really took our time, and I mean, on average, it could be from, let's say, 3 months, even to up to 9 months from the first, let's say, conversation, right? So we were definitely, let's say, not the most fastest one, but again, because we were a specialist fund, we saw that our value add is a bit different, let's say, the classical VC funds.
Mm-hmm. And how does now AI fits into that process? The initial assessment, communication with the startups, making decisions, doing calls, and maybe even figuring out initially, do you want to talk to them or doing your own research? So how did you implement AI throughout this whole process?
I mean, in our case, literally everything, everywhere where possible, right? So because again, we're a small, nimble team, but again, we want to understand very much. So we like to understand the subject matter. We want to understand actually the technology, the team, very much so, and so forth and so on. And starting from just research, understanding, okay, so what are the most prevalent diseases, right? Which parts of the, let's say, world, what are the conditions, what is actually the biological challenges, right? Because again, it's like first principles, right? We actually go to the biology level, to the physics, and then actually we build a case. Okay, what are the business model, what are the actually reimbursement models, and so forth and so on. And so actually based on that, we build the cases. Okay, this is the white space, this is, let's say, where we should look out. And based on that, then actually it's easier afterwards also to look out for these companies and actually see them. Because as Ashok mentioned, one of the most important part was for AI when we implemented it in our systems was exactly to reduce the noise, improve efficiency, and ideally also create better outcomes.
Mm-hmm. Thank you. Ashok, I would mirror the same question to you, and also maybe you can share, in addition to that, what problems you try to solve with AI, apart from trying to filter out the noise and find the best signals. So, where you implemented AI, and also what issues you try to solve.
Well, I'll start with what problem we're not trying to solve exclusively with AI, and that's which company should we invest in?
Mhm.
That single decision. It's a tool that we use to help us make better decisions towards that fundamental question. But we're not outsourcing our entire investment decision making to AI. Now, of course, there are funds out there that do algorithmically make their decisions, and that's their design. I mean, we've already heard about some of the differences in, fund strategies, whether it's, being verticalized and having sort of a deeper dive, approach like Sigvards did, or if it's more agnostic like NuFund and we're fielding, inbound. I was skewing my initial workflow description to the inbound deals that we receive, which is the vast majority, but we are also outbound hunting deals constantly as well, which is a lot of the deals that we end up actually funding, right? So there's multiple approaches to the sourcing side, but where AI, I think, universally has now affected our workflow, regardless of whether the deal came in or we went out and found it. At the evaluation stage, we have an analyst that we've created. It's an AI analyst that does a lot of that high level research and handicapping of the deal, not unlike an associate would do at a typical venture fund. In the past, I think most have an AI analyst now, at least doing some of that work. And we're not unique in that regard, although we did build a model that was sort of unique to the deals that NuFund has historically done and the kind of deals that we want to do. So it's not totally off the shelf, but we do use our AI analysts to score deals, specifically to score ones that we feel like are not going to be a fit. So again, at that, filtering out. But then even among the deals that we do ultimately move forward with, we want to have some sense of the heat level. So we do use a proprietary AI tool for that. The other one I alluded to before was our GPT for matching our members with deals. So in the past, because I've been here for a while and I know all the people at some level, if a deal came in and let's say it's a cervical cancer diagnostic, I would think about, maybe I would do a little bit of research myself on the member's background, LinkedIn, their application to NuFund, etc. And I would try to connect the company with the right members. But it was very manual, the process, and obviously not as efficient as it could be. We've automated much of that process. And now we have another tool that we built that provides me with a list, me or whoever's kind of running that deal cohort, the GPT SME Finder provides a list of members. Usually it's 5 to 10 who have relevant background over a variety of dimensions with the company that we're looking at. And invariably, at least half the people on those lists are people I would not have known to match, because the AI is just going much deeper into members' backgrounds using all publicly available and some NuFund internal knowledge to make those matches. So the short list is less short based on the AI finder that we have, and then it gives us more opportunities to get the right people and the right eyeballs on the deal quickly, which is our goal. So those are the two areas right now that I think we're having the most impact from AI. Downstream at the decision making level, we'll look at those reports, we will consider the inputs, but at the end of the day, it takes 5 human beings in our case to recommend an investment in a deal.
So you mentioned already that you use GPTs for your workflow and you have built something else. What is actual tool set that you're using at the moment? What kind of LLMs, what you have built yourself? Give us the names.
The GPT is a chat GPT, and the LLM is based on Gemini.
Cool. And Sigvards, maybe you can tell us what were and are your favorite tools that you used and still using for the process that you try to optimize, and you can also maybe give insight what processes you did try to optimize. Well, you mentioned you used it everywhere, but maybe some specific cases.
Yeah, sure. So first and foremost, it's in the early stages, right? As I mentioned already, research. So for research, it was classically, particularly in the early days, it was Gemini as well as Perplexity. So these were, let's say, the top 2 ones in the team, as well as, and again, in our team, we tried both deep think and some with ChatGPT when it was available. These days, also Claude and so forth and so on. But let's say for specific research type of things, Gemini was, let's say, the classical go-to. And then afterwards, let's say once actually a deal happened and they're in our portfolio, this is actually where we also spent recently for the last, let's say, half a year or even more, actually building a lot of internal tools actually to build actually a value-added support system for our portfolio companies. And again, because we have access to our own proprietary network for hospitals, providers, insurers, you name it, and so forth and so on. Again, to manage them, provide introductions, also just basic, let's say, reporting tools and so forth and so on. And for that, Cloud Code. Cloud Code is the go-to these days.
Okay. So you basically tried everything under the sun. Can you give us an example, maybe, of a prompt that you most loved and you most used?
I mean, I have so many prompts. I was actually thinking today, actually, what would be the prompt, right? To be honest, the best prompt is actually when I said, okay, and this is more on myself individuals, when I was able to actually say, okay, who am I? How do I think? How do I work? Specifically in terms of what kind of frameworks, what do I look at first in a team, in a deal, and so forth and so on. And based on that, like give, let's say, a basic cognitive framework in terms of how to look at, let's say, the worldview, so to speak. This was when essentially the light bulb just clicked for me, right, back in the day. And also immediately the output of any ask, any tool, any, let's say, workflow that I built over the months afterwards was just based on that. So I think for people listening out there, I think the best prompt will be actually the most individualized, which is actually how you think, how you work. I know it's not easy to actually answer that, so you have to take your time there. But when you do, trust me, it will be magical.
Go see a professional, talk about your workflow, figure out who you are as a human being in this universe, and then you can create it. Good. Ashok, maybe you have quite a few members that you're also trying to match startups to, and your process is slightly different because I feel that you have more eyeballs involved. How do you feed the data to all of your AI tools? And can you give us a more concrete example of there's a startup, there's an application, you feed it in, what happens, what do you put, maybe what kind of prompt you use, and also how do you use maybe to match as well your members to startups?
Yeah, I guess I'll focus on the latter because the former, in terms of the evaluation, would be the typical kinds of, the model questions that, like I think Daria, are doing with the Angel Network in Estonia. You're looking at the market size, you're looking at the caliber of the team, right? So that's just programmed in to ultimately come up with some sort of a scorecard. But the matching of members is where I think we do more prompting, because it's one thing to say this deal is biotech and these members have worked in pharma, but it's another thing altogether to say this is an mRNA drug delivery platform, or this is a oncology drug focused on pancreatic cancer. And typically when you're trying to match without very granular data, you may find high level, surface level matches, people who worked in genomics looking at a next gen sequencing deal. But there's so much nuance to looking at a startup that's by definition almost creating an emerging technology within a more established space, that the AI has really helped to come up with multi-layered reasons for matching members. So in other words, it may not be that they directly worked in the exact clinical area. They may have, and we typically have people who have at least some experience, but the AI also will pull in people who have worked on regulatory pathways for, let's say, a phase 1 drug candidate, and that will help us make some of those broader decisions about fit for a deal. Since the technology may be interesting, but what's the FDA's current opinion on this particular area, and what's the pathway that the company, the startup, is going to endure, right? So I think that prompting on looking at the hot button issues for any given startup to find a cohort of members who can help evaluate is really important. And the AI thinks beyond just the surface level. This is a biotech drug, and here's some members who worked in biotech. That really won't give you a qualified response.
Mm-hmm. How long did it take you to build this particular GPT for you to start using? So, because I assume first of all, you needed to feed all of the members that you have. How many members do you have at the
About
moment?
350.
Mm-hmm. And then you probably needed it to pull the data from the internet. So how did that process look like for you?
Yeah, and the membership fluctuates, where there are people who leave every quarter, and then there are new people who come in, so it also refreshes, and we need to refresh the data set with the transitions. But it took about 6 months to get the model established, and then software's like bonsai trees, so you have to keep on caring for it and creating new versions of it. So we're on like our 4th version right now, which is the best version so far, and we'll continue to iterate on the versions. But the basic development of the tool, was something like 6 months. Now that wasn't 10 people working all day like a software scrum at a YC backed company getting ready for demo day. This is in addition to everything else that we're doing, with some really smart qualified people getting a tool that we felt like would do more good than harm. And it took us several months to get to that point, and now it's just something we keep refining and updating.
Mm-hmm. And is the whole team involved into building this process, or you have a dedicated AI wizard who works on it full time from their dark cave or mom's garage?
Yeah, we don't have the guy that's doing heart surgeries working on the AI model. We leave the evaluation of heart device deals and the actual hearts that he's treating, in his real life, to focus his attention. We have a few AI czars, Amin, Haidar, a few others that will help them to build the tools.
Okay, good. Thank you. Sigvards, for you, I had a question in terms, how do you, well, you mentioned that you do research, and how do you do the research into the more narrow fields, and how do you run assessments? But also, how do you trust the results? Because it's sometimes out of your scope, because you can't know everything. You make a machine do the research for you. So how that process works, and do you trust, and how do you verify?
Nicely that you said trust but verify, right? So this is the saying, exactly. So we always trust, but we verify. So as with any research, so first things first was also as a team we have, or let's say a list of topics that everyone's interested for some whatever reason, and maybe they haven't say written down like a core thesis or something like that. And at some point, we are just, when we have capacity, we're researching, right? And then the person who's picking up that mantle on that subject matter, so they do, let's say, the groundwork. But then actually what happens is, and this is what we introduced a couple of years ago, was actually we had research topics where team members over the months continuously just brought up actually research topic, what they have done, or in addition to your everyday activities, actually have research, right? And then as a team, we discussed. And afterwards, once we have these discussions, again, everyone has their own experience, their, let's say, background, and so forth and so on. And then sometimes, and quite often, actually, what happened is that we actually say, hey, somebody knows us even more, let's say, better subject matter, right, person, that we would like to actually have a deeper conversation. And so from that, let's say, initial, let's say, desk research with AI, and with our amazing intern team and so forth and so on, what happened? So we utilized a lot of interns for this, particularly in the early days as well. But then afterwards, what happened is that, yeah, we said, hey, we actually have to have a subject matter person to talk to, right? And as things moved forward, what happened was that, yeah, actually we become even more confident of certain, let's say, areas. Let's say, for example, neurodegenerative diseases. So this is one of our, let's say, topics that we definitely strongly believe we're, let's say, subject experts, right? And as well as other, let's say, areas. And we build this, let's say, conviction. We build this, let's say, by verifying, actually talking with people as well, right? Talking with doctors, talking with providers, talking with insurers, payers. Again, in healthcare, you have many stakeholders. So essentially, you have to talk with all of them, fortunately or unfortunately. So essentially, yes, so everyone has an opinion, and most of the times, the more people you talk to, the more opinions you get. So eventually, yeah, you'll have to, let's say, come to a conclusion, so to speak.
So basically what I'm hearing is that you would do the research on your own using different tools at your disposal. Then you had internal conversation to make sure it checks out within the team. And then you would take this conversation, let's say, deeper, and have your network assessing what you have found out.
Mm-hmm. And on that subject, actually, so the beauty of healthcare, I would say, is that a lot of stuff, a lot of data is actually publicly available, and in this day and age, available through an API. So you can do a lot of beautiful, let's say, research, beautiful, let's say, firsthand research that actually you afterwards, yeah, you find super interesting things.
Mm-hmm. So basically, not only the magic of AI, but pulling the data from trusted resources just automates that process. Everything is with AI, even the standard automation processes. Okay. Did you use any tools that you tried and you dropped? And if yes, then why?
Okay, out of respect for the companies, I won't name names, but of course we tried a lot of, particularly let's say in early 2023, 2024, so late 2023, but actually more 2024, 2025, in terms of your big databases, very, let's say, well-known companies about, let's say, also their for pipeline, deal flow, various specialist SaaS tools and software and so on. And I think for us at the end of the day, again, because we're a specialist fund, we just said, okay, we have actually, fortunately, our founding partner, Joseph, is actually a coder, but old school, like literally old school type of coder. And so from that perspective, we actually managed to build a lot of the tech stack ourselves. And so because again, we're a niche fund, we have a niche, let's say, thesis. So we couldn't, let's say, find the ideal, let's say, partner for us. And so, yeah, so we built it eventually.
Okay. That's nice when you have the expertise within the team to code your own tool. Ashok, how did it work for you? Did you try any tools that you didn't particularly like? Because I know you didn't build your own tool, but you built on top of the existing tool through APIs as well. How did it work for you? Who you didn't like?
Well, I think we just avoided a lot of options. Every day I get a different tool solicitation in my inbox on how to, make better decisions or completely make decisions as an investor, or, supplement various touch points in the workflow. But most part, we just stuck with, best in breed products and then configured them to work for us. Fortunately, because we also had some AI whizzes in the group who are able to work with, really organic clay, as opposed to having to try out, the laundry list of companies that are out there and probably have some, failures along the way. We just focused on our strategy, which is to, do it ourselves with, kind of some proven tools.
So neither of you want to tell me who you didn't like.
Well, we don't know because we didn't use them, So I mean, that says it all.
Fair enough. You don't.
Okay. Do you really want one name? I can tell you one name.
I couldn't even tell you one because I completely ignore. But yes, I'd like to know, so I make sure that's not the one that I finally say I'm ready to try it. This is the one I won't.
Okay,
try.
So full transparency, and it's PitchBook. So
okay.
And so we used it, and with all due respect to them, I mean, yeah, I think there's a lot of questions about their moats going forward.
Mm-hmm. But I mean, I think it's quite established knowledge that the data quality is complicated to come by. Let's put it this way. Thank you for being honest and sharing your experience with different tools, or lack of experience, because you try to focus on the established partners. I would love to get a specific example where AI has, especially for you, Sigvards, because you implemented it throughout the whole process and decision making as well, but where AI pointed you into one direction, but either your knowledge or your gut told you that maybe it's not true, and you do put obviously a human in between and you verify everything you find. But was there an example, a good example, where AI told you, yes, this is the most amazing deal, just tell them to shut up and take your money, but you felt, either you yourself or the team, that it's very wrong?
I mean, so in our cases, that's so yes, I have asked that question, right? But of course, we actually didn't use it like that as a firm, right? So we actually have humans running the show, so to speak. But the story, what I will share, is that definitely, particularly again in the early days, before actually we found out and I learned how to actually make it customized, right? Through instructions, through memory, and so forth and so on. Particularly, let's say last 9 months since Cloud Code again. I will say multiple times that if there's one tool any founder needs to get familiar with, it's Cloud Code. And because actually in the early days, again, every single deal, every single tech, every single startup was like, you're absolutely right. This is the best thing. This is the most innovative company. You should definitely, they have high potential and so forth and so on, right? And so the AI was always hyping. And well, we know as investors that unfortunately the statistics are what it is, right? And so I think the challenge these days, particularly, and one of my recommendations is, again, use these tools essentially as an augmentation instead of automation, right? And if you'll essentially work with the default settings, with the default inputs, then you will get the default output. So, and it essentially will tell you, you're absolutely right. This is the best thing ever, and so forth and so on.
Mm-hmm. Yeah, I would prefer AI to stop telling me that I'm the most amazing human being on earth. Even if I ask it to not to do this, it still does. Ashok, I would mirror the same question to you. You have your AI analyst that pre-assesses the deals. Did you have the similar case where it told you this probably should go forward? Your gut tells you no. And then what did it teach you about trusting AI as well, or not trusting AI?
I like Sigvards' discrepancy between augmentation versus automation. And I'll give you an example of how the automation would fail and does fail, and our augmentation needs to correct it. So as I mentioned, when deals come in to our funnel on Dealum, we have our AI analyst do an assessment on every single one. There are absolutely cases, multiple per week, where the analyst filters a deal out because it's basing its evaluation on information and the application and the pitch deck and our historical model. That doesn't necessarily mean it has all of the data points that a seasoned investor would consider to evaluate an opportunity. And in some of those cases, we'll have one of our members who referred the deal, who is familiar with the company, maybe knows the founder for 6 months, a year, 2 years, reach out and say, can you tell me the status, or I noticed this company has been declined. I want to let you know XYZ. Sometimes they'll do it before, sometimes they'll do it after, if it's a short time frame, let's say between when the decision gets made by the AI analyst and if it gets declined. And we will then recycle those deals back into our funnel because they were essentially false negatives, because the AI analyst is not perfect. And if it was perfect, by the way, we would all just depend on AI analysts to do all of our venture investing, and we all be having 5x kind of fund returns, right? And I think we're saying that that's not possible, may never be possible. We'll see. So there are absolutely instances where we need to augment and correct a mistake by the AI analyst and take a closer look at a deal.
What I'm hearing and what is curious for me is that, does it mean that you basically allow AI to reject startup more or less automatically?
Yes, in some cases.
Mm-hmm.
With the information that we have available to us. However, there are some cases where we decline an opportunity because we don't know certain things that we can find out, and that will change our decision. There are certainly startups that we choose not to go forward with that if we knew 100 other things, we might make the decision separately. But any investor knows it's not practical to have all of the information available on every single opportunity that comes in. So you have to use some heuristics. That's something from a founder perspective, which again, I've been there, it's hard to understand. But from an investor perspective, they all know that you have to make decisions on the information you have available to you at any given time. So when someone is able to provide us with that information that can affect a decision, whether to move forward or not, we will always consider that. We're not always able to access that information. So there are certainly some false negatives that remain, kind of negatives for us, and some deals that we'll miss. And every investor has those ones that got away.
Absolutely, because when you have a huge pool of startups that you're assessing, even if you're doing it as a human being with your brain and two eyes, you will still have false negatives, and then
That's right.
then 6 months later they will close a huge round and shout out in LinkedIn that this VC rejected us and made the hugest mistake of their life.
And in our case, we're cheering them on, still, because founders are doing the hardest work. And, I think anyone who's a founder knows and can appreciate any other founder winning and should be able to appreciate that. I think the cases of the false negatives are, a minority. There are many, many more true negatives, and our AI analyst and our, human evaluation helps us just separate the ones that aren't a fit for us. Because again, just because a deal's not a fit for NuFund doesn't mean that it's a bad company or a bad deal. It just means it's not going to get to the finish line. And the vast majority of deals that we process, at least augmented by AI, which is, I think, really how most of them are being done, augmented by an AI analyst. If the analyst says no, we're not going to fund the deal. We could get to that no in 10 different ways. The analyst is just going to tell us much faster, and we're going to be able to provide that decision to the founder much faster. But however we arrived at it, it was going to be a no. So better to do it fast. I think that's one of our axioms at NuFund, and comes from our founder mentality that, the best answer is a yes, but the unacceptable answer is a maybe. A fast no is the second best answer to a yes.
I actually agree with that. And I think on this note, we can slightly shift the perspective and address our founder friends who are listening. And we actually have a question, and I had a very similar question as well. But basically, what is your advice to founders who are currently fundraising? How is there a way for them to stand out from the crowd and make sure they actually get actual humans to check their profiles and have a first meeting? Do you have any advice on this? I will address it to Sigvards and then to Ashok as well later.
I think
yeah, go ahead.
No, so it's a great question, and I think the key here is that you can do a lot of things, but I will remind that any investment for the foreseeable future will still be human-led. So a lot of things will be relationship-based, meeting people, actually going to conferences, reaching out to your network, and so forth and so on. So yes, the pitch deck and the day room needs to be clean. It needs to be consistent. So that's one thing. So if a data room and a deck and a business model or Excel spreadsheet and a business plan or whatever one pager will have inconsistencies, because I know a Cloud Code can literally check inconsistencies. So that's literally a no-brainer. So if there will be consistencies, that will be a huge red flag immediately, right? So the thing that founder can do is have basic hygiene in the data room, hygiene in the deck in terms of who you are, what you do, what's the traction, basic things, right? Just keep it simple. And then afterwards, it's people, right? Because again, we have seen great decks from, let's say, not so talented founders and vice versa. We have seen super awful decks from the best founders, right? And we have invested in all kinds of people. So I think there is no magic formula, but if there would be one, it will be still human-led, fortunately or unfortunately for founders.
Mm-hmm. Thank you. Ashok, what is your take? What is your advice for founders to stand out?
Maybe use AI to help you find the right investors, because I think the question in terms of increasing your odds is not about changing the font on your pitch deck or rephrasing a bullet point at the end of the day. It's about getting in front of the right investors for your company. And you could use AI to help you on that front. At that point, once you're in front of the right investors, meaning the stage, the vertical, the location, etc., for your startup is applicable to the thesis for that particular set of investors, if you talk to enough of them, that's how you're going to actually increase your odds of funding, as opposed to a random buckshot approach at a large number of investors and just changing the messaging kind of to those investors. If you're not a vertical SaaS company with $1 million ARR, then you shouldn't be pitching to B2B SaaS seed stage VCs. And I think it's you get more utility and more bang for your buck as a founder focusing on the curation of investors than the tweaking of your pitch materials. Nobody's going to decide whether to fund your company or not based on pitch materials. I get it and appreciate the question, which was a good one. How do you pass that AI layer, right, with your materials, right? That's the goal. I think it's more about getting to the right investor. And if you do that, then you'll have a decent chance of getting to the human regardless. So that's where I would focus my time.
So I think to summarize it, what you both said and what I also am experiencing is that, well, first of all, people still look at the deals and the process of getting through is the same. But if you narrow down to the investors that are fitting your stage and you fit also their thesis, that means that even their AI will filter you through and will put you in front of actual human beings because there is a fit and there is a match. And at the same time, considering everyone is using AI, and I think in schools it's the same now, there's zero tolerance towards grammatical errors because everyone can run all of the essays through whatever LLM you're using. So the same works for this case, is that there shouldn't be any issues and discrepancies because you can assess all of your materials you have put together with obviously AI to make sure everything is aligned and this story is straight as well. Unfortunately, I don't even think there's anything else you can do. And then also building actual relationships, going into the conferences and meeting Sigvards and Ashoks of the world and shaking their hands will not disappear, which is very good. And this is what you're actually supposed to do as a founder, building relationship with investors that you
If I can add one maybe important part is for founders who are considering fundraising. So because it will be super hard and super long, like most of the time, do it. So start fundraising, or at least start, let's say, talking with investors, start doing market sounding, that sort of stuff. Actually, be even many months before actually you officially start fundraising, right? Because again, there was this famous line from Mark Schuster about investors investing in lines, not dots, right? And I love that. It's my favorite because eventually investors will invest in the human, in the team. So how do you build that trust, right? This is the question. How do you? So essentially it will be time. They will see you once, twice, hear from you, see you on LinkedIn, see you in their network and so forth and so on. And then maybe at one point after 6 months, 9 months, 12 months, they will say, okay, they're still sticking around. They're actually growing. Let's take that bet.
Good advice. Thank you. I think I will pose the final question for you guys. This is my favorite question, and I ask it to everyone with whom I have similar conversations. And it's just to think about the future. It's impossible to predict, but what is your view? How AI will change investment ecosystem or investment process in the next 2 to 3 years? How do you see AI changing it, and which direction you think it's heading? Sigvards, you're unmuted. You can go first.
So I don't know is the honest answer, right? But if I would have to, let's say, have a thesis, or let's say where a point of view where it's going, definitely will go into augmentation, route, which is that investors, funds will have their AI co-pilots, let's say parts of their thesis actually in the wild as an agent or something like that. And so, yeah, I'm not sure how it will look like in terms of like economical sense, right? But what I know for a fact is that the classical VC, let's say, playbook in investing, particularly let's say in this asset class, will change, right? And those that are not embracing the AI, let's say, even a bit, right? I'm not saying go full open claw, but let's say a bit. So then, yeah, time will, let's say, move on without you.
I think it's true because for startups similar to investors, the speed in this game is very important. And also, I know that a few early stage funds already trying to flag also deal companies and startups before they even happen by, I don't know, checking the business registry, verifying, running it against LinkedIn profiles and trying to flag the in potential deals even before they become actual startups. So if you don't utilize it, then you will be a slow fund and you will not get the best deals. That can be true. Thank you. Ashok, what is your take on the future?
I'd love to know what it is, but I think, what we can say in a very unpredictable, volatile future is along the lines I would echo, Sigvard's sentiments. Who doesn't want to be a more informed, more efficient investor or, human, right? So if you don't at least consider implementing AI into your workflow, then you're saying, I don't want electricity or I don't want technology. I mean, that's also like saying 10 years ago to investors, would you consider doing meetings on Zoom? Not that that might be your preferred way, or maybe you also want to have a face-to-face and, we all kind of do all of the above, right? So just think of AI as another tool in a toolbox that includes web conferences and other technology tools, like in our case, Dealum for processing our data rooms. We don't do that by pen and paper and have a physical file box anymore, right? So AI is just the latest, and certainly I think will be one of the most impactful tools in a toolbox for an investor to use.
Mm-hmm. Speed and efficiency. This is what we always, at least in my world, this is what we are working towards. Thank you, gentlemen, for your time. To conclude the session, I think every time I run this session, I try to have an interesting conversation so it provides insights for everyone who is listening. And with this, I had a goal of actually getting the juicy details, what kind of LLMs you're using, what kind of prompts you are doing. But what I also see me by using AI is that it's so personal, and then you find which LLM you vibe with, I guess, which one you trust the most. So if you are a startup who is trying to figure out how to integrate AI, or you're a fund or just individual angel who is trying to optimize the processes, go out there, test things out, see what prompts people generally try to use or how to structure them, how you see the world and structure them in that way, and see what sticks and what works for you. And never trust LLMs. Have actual humans checking it, or do a fact check yourself somehow. And yeah, and then none of us see that the future will be just LLMs talking to LLMs. Please not. Yeah.
I don't think so.
At some point when they just appeared, I really, really thought that startup LLMs and chatbots will be talking to investor AIs, and there's going to be no actual human communication. But thankfully, we're not anymore moving into that direction. At least I hope so. Thank you so much. Thank you for an interesting discussion, and have a lovely rest of the day. I think we can finish on this note. Bye, guys.
Thanks, everyone. Bye.
Thanks. Cheers.